the Business Development Unit and the Venture Capital in Tobago, all of which are geared to provide financing. But right now, depending on the financing from the government doesn't have it. Government can guarantee it though. So let the credit unions lend it to these institutions with a guarantee from the government. And it means then that we can develop small and medium-sized enterprises in Tobago. We can get cooperatives engaged in producing goods and services. And in the case of Tobago, the THA can be a guarantor. It doesn't have the money now, but it could say, well, yes, at some stage we'll get the money. And I think if we did that, we would have been, as Mr. Jack said, he wants his children and his grandchildren to say that we did well. And if we did something like this, I think we would do well, and I therefore thank you.
As Mr. Adams would have alluded earlier on in his presentation, me and company were hired by Techie Credit Union to do a legal review of the proposed legislation. So my job here today is simply to present briefly, well, as brief as possible, the presentation and the report done by me and company. In doing so, I will follow the structure that me and company would have utilized when they presented in Trinidad. So we'll go through an introduction, we'll summarize the current legislation. We will also look at the key features of the proposed legislation, main observations on the proposed bills, comments on the provisions in the bills. Now, these are comments by me and company, and some of the key provisions will also be examined. Okay. So, introduction. As we may all remember, in 2008, Central Bank issued a policy proposal document regarding proposed legislation governing credit unions, with Central Bank as the regulator of credit unions in respect of the provision of financial services. Meyer and company undertook comparative reviews of the Credit Union Bill, the Financial Institutions Act, and credit union legislation from other countries, namely Australia, Barbados, Canada, Great Britain, Ireland, and the United States of America. They also held discussions with representatives of the cooperative credit union movement and TechU on various aspects of the reviews. Now, the current legislation. As we are all familiar, the credit unions are governed by one statute, the Cooperative Societies Act, Chapter 8103, which was first introduced in 1971. Some quick maths would tell us that that piece of legislation is 45 years old. Now, the CSA essentially provides for the regulation and supervision by the Office of the Commissioner for Cooperative Development of the Credit Unions and Cooperative Societies. This office is a department within the Ministry of Labor. The CSA also outlines requirements for registration and membership of cooperative societies, establishes the duties, privileges, and businesses of societies, and has provisions pertaining to deposits, shares, loans, investments, and restrictions amongst other prudential matters. It also outlines, importantly, how societies can be reconstructed, amalgamated, transferred, and wound up. It provides for the settlement of disputes and establishes penalties for certain breaches of provisions within the legislation. Now, the legislation that was laid in Parliament in November 2014 composed of two bills, the Credit Union Bill and a Cooperative Societies Amendment Bill. Now, just keep in mind that the policy supporting this was to move finance regulation from the Office of the Commissioner to the Central Bank. That would have been done under the Credit Union Bill. And what that also meant is that we had to amend, consequentially, the Cooperative Societies Act. So that's the first thing to note, that there were two statutes to govern credit unions with multiple regulatory bodies overseeing activities of credit unions and secondary bodies. Another key feature was dual registration. First, a cooperative or credit union would have to register with the CCD and then the central bank, which would then issue an operating certificate. The grant of an operating certificate to an existing credit union, though seemingly automatic, was subject to supply of information to central bank. Failing the supply of that information, a credit union would have been deemed to operate without an operating certificate. Seems kind of complicated, right? The central bank, under the proposed legislation, can also restrict or revoke an operating certificate on grounds of, for example, failure to comply with any requirement, prohibition, or compliance direction, etc. A little more complicated. Another one of the key features of the legislation is the separation and restriction of credit union business activities under categories of financial and non-financial activities, with a credit union only being able to conduct Class 1, or with prior approval of the central bank, Class 2 business activities. Now, Class 1 business activities included deposit-taking, loans, investments, whilst Class 2 business activities included mortgage business, confirming and acceptance, trust business, transaction services, brokerage, and other financing services. The legislation also calls for stringent board membership criteria. The legislation also looked at detailed reporting requirements, and an examination of information that's reported may lead to the central bank imposing corrective action. The key word there being imposing. The criminalization and increased fines for non-compliance. Another important feature that was highlighted by me and company was the fact that credit unions were to be treated as if they were banks or non-bank financial institutions, and that appeals were to be made to the High Court instead of the minister. And a point that May and Company made in their review was the fact that the High Court is already burdened with its current mandate. So where exactly do credit union appeals fall within that? How quickly can they get a hearing? And all of those issues. Their main observations in the proposed bills was the next segment of the May and Company report. They looked at the fact, first of all, that the proposed bills were incompatible with credit union principles, practices, and ideology. There were numerous disproportionate provisions for a sector that accounts for under 5% of the assets held by financial institutions. Now, this is going back to what both Commissioner and Dr. Henry would have pointed out. 3% or so of the larger picture, and yet still you're being treated just as the other 97% was being treated. Something seems a little off there. The legislation was overcomplicated and not clearly defined with a legislative and regulatory structure. The legislation featured enhanced prudential criteria, which was welcomed by the cooperative credit union movement. However, compliance was to be done with transition periods set out in Schedule 5, which may be difficult for some credit unions and should be on a graduated basis. Now we go into the comments on provisions, specific provisions within the bills as highlighted by May and Company. Now this, to me, is one of the most essential things. Whenever you're legislating for something, we have to understand what we are legislating about. And May and Company pointed out the fact that the bills, it's a historical fact, that the bills ignore that credit unions in the main have been run prudently for over 50 years. Now going back to the maths, the 71 legislation is 45 years old. Credit unions have been run prudentially even before that legislation that we currently have. In comparison with other pieces of legislation that were reviewed, as we pointed out earlier, May and Company looked at a wide range of legislation. And these other pieces of legislation have adopted best practices. It was noted that the credit union bill lacks the unique treatment which is required and recognized in other legislation, other comparable legislation, whereby corporatism and in some cases the active promotion of the growth of credit unions is provided for within the legislation. The legislation also looked at board membership criteria, and the provisions in that respect applied to all credit unions irrespective of their size, asset, or nature of their business activities, and may present serious and insurmountable challenges for less mature credit unions. Basically, you're trying to do a one-size-fits-all, when in the case of this movement, one size will not fit all. The legislation also looked at one of the comments, was also in respect of statutory board duties. The legislation stated that to manage the credit unions statutory board duties to manage credit unions with transparency and accountability, and liaise with the central bank on certain matters and comply with directions given by the Inspector of Financial Institutions. Going back to that whole multiple regulatory bodies aspect. Now, the prudential criteria requirements, provision in the cooperative societies regulations regarding loans by non-financial cooperatives were retained, and some of the provisions continue to apply to credit unions. Some other comments also included the differentiation made between financial and non-financial societies, and financial and non-financial activities was introduced, delineating the business activities of credit unions. As pointed out before, reporting to regulators. The regulatory arm set out in the legislation seemed heavy-handed and without proper synchronization, which in turn would put an overload on credit unions in a system, as I would have pointed out earlier. Failure to submit information is a criminal offense and may also lead to the revoking of an operating certificate. Shares and deposits. One of the important things about the legislation, the new legislation, was that it introduced permanent shares, which are optional but cannot be withdrawn except on winding up. The auditing aspect. The auditor is required to report to the central bank with specific provisions introduced relating to the appointment of external auditors and their role. Offenses and penalties. There were severe penal and other sanctions for breaches of non-compliance with various provisions of the respective bills. Appeals. The only manner of appealing a decision of the regulator is before a court of law. That is within the current legislation. Now, I'll go to the recommendations that May & Company made based on their research. May & Company recommended one statute, which should govern all cooperatives, with a separate part speaking to credit unions, with sufficient detail to prevent ambiguity while avoiding bureaucracy. Another recommendation was also one regulator. Now, Commissioner would have pointed this out earlier, but this is a really important aspect of your discussions and your comments this afternoon. One regulator. Should this regulator be a statutory body? The suggestion from May & Company was that it should be a statutory body composed of representatives from the Central Bank, Ministry of Finance, Ministry of Labor and Small Enterprise Development, 3 representatives from the cooperative credit union movement, and 1 member from the trade union sector appointed by the labor movement. This is a really important issue for us in moving forward. So your views in terms of who should be the regulator, where should they sit, what should the regulator be composed of? Those are important questions that your ideas on would be very appreciated. Governance. Credit union board. They spoke to a credit union board being appointed with primary responsibility for governance, and noted that the appointment of professional staff is key to the proper management of the organization. May & Company also recommended that the law should be flexible in regard to the board of directors, whom the members select, subject, of course, to certain necessary criteria as set out in the Cooperative Societies Act. So whilst May & Company was recognizing that the credit union members themselves should have a say in who is selected, it was also recommending that who is selected should be balanced by persons being professional and capable of proper organization and management. Business activities. As I would have said before, there was a delineation of the business activities that a credit union could provide under the proposed legislation. May & Company has recommended that there should be no classifications or restrictions on services or activities which credit unions can undertake, and there should be no distinction between financial and non-financial activities. So your views on this point would also be welcome. Prudential criteria. Credit unions should be able to engage in a range of services desired by their members, subject to observing the necessary statutory criteria for engaging in business enterprises. Another important recommendation with respect to offenses and penalties. May and Company suggested that a less rigid penal approach should be taken. Example, first and second warnings, so implementing a warning system before actually implementing any sanctions. And that credit unions should be allowed to operate on the basis of their cooperative principles and be encouraged to comply with regulatory and supervisory requirements. So if it is that you are in agreement with the suggestion from May and Company that a less rigid penal approach should be taken, what do you think that approach should be? How do you think it should operate? Another key recommendation from May and Company is that mediation should be utilized. In the current system, if you have a dispute between members in a cooperative or between cooperatives, you go to the commissioner. May and Company recommended that within any new legislation, provision should be made for mediation of disputes between the regulator and those regulated under the umbrella of the Mediation Board of Trinidad and Tobago. Now, is this something that you are in agreement with? Do you think that this will best suit your movement? And your views are also very important in this aspect because at the end of the day, you are the experts in your area. And knowing from you if something is going to work is very important to us in terms of including it in the legislation. So if you think that mediation in this way would be the better thing, then we'd appreciate your views. If not, what are your other suggestions? And appeals. May and Company recommends that a special credit union tribunal to deal with appeals be utilized instead of the High Court. And it's preferred based on cost and efficiency, and that the tribunal can be established as a special unit under the Industrial Relations Act. So in dealing with appeals, there are two things to look at. First of all, do you think a special credit union tribunal to deal with appeals should be established instead of going to the High Court? Or if you think there should be another system, a disputes tribunal, what do you think it should be? What do you think it should look like? And do you think that this tribunal should be established as a unit of the Industrial Court under the Industrial Relations Act or as an independent body under the legislation? Another key recommendation from May and Company is the creation of a model bylaw. May and Company recommended that an adaptable model bylaw be developed through a consultative process between the cooperative credit union movement and the regulator using currently approved bylaws and the regulatory framework and taking into account the different circumstances of credit unions. So that is a brief presentation of the May legal review. And when you are doing your comments, it would be appreciated as to your views on aspects of it. Thank you.
It was also stated that we should refine and expand our focus and develop and design what we want to see for the next 20 to 30 years for the cooperative movement. Our minister pointed out the need for proper, and I think most importantly, inclusive and sustainable policy and legislation that leaves a lasting legacy that would benefit, and to use Assemblyman Jack's word, that will benefit our children and grandchildren and many more to come. There was calls for good governance across this sector. It was pointed out that we've had a history of good governance and that we should maintain and improve where necessary some of the efficiencies. And I think there was call for transparency, a little more transparency and accountability as well during the process. And I think most importantly, one of the points that was made is we need to relook the way we manage our assets to the benefit of our members in the cooperative movement. And we need to look at that paradigm shift, how are we moving? And it was very clear the asset base of the cooperative movement is very strong and has the potential to reach many citizens of Trinidad and Tobago. I think in all of this, it was clearly pointed out to why we're here today, and that is to relook the policy and legislation for the cooperative sector and how this, what we craft in this room and together with the rest of the voices that we've heard, how that policy and legislation can really support the growth and development as well as the values of the cooperative sector. And I mean, I underline the values, I hold them very dearly to heart. I think also we need to look at charting the way forward, and I think Mr. Rami said, and I like this, charting the way forward built on love, passion, and driven by reality. I could not agree more with that. He also called for the cooperative business model to be entrenched in the Trinidad and Tobago society. And I think Tobago has the base already. In Trinidad, we may still have to work on making that base, but Tobago has the base already to make that kind of reach. The Commissioner outlined the developments at the international level, and in particular the framework for developing a policy via the ILO Recommendation 193, which provides guidelines for cooperative development. And he also made point of the Sustainable Development Goal, in particular number 8, and suggested, and he looked at some of the key considerations that we should take to heart when we are developing a policy and legislation for the future of the cooperative movement. I think the last presenter, Ms. Dr. Henry, certainly brought home the potential that cooperative has for development and the potential for growth. And he referred to it as the third sector. I mean, I see it as the first sector, and we differ a bit with him, but I believe that we do have the potential to be the major driver of the economy. It is evident from what we've heard this morning that there are a lot of other persons who strongly believe, and these are persons at the decision-making level, and I think we can change that direction. And certainly I will not try to touch the legislative presentation, not being a lawyer in any way. I think that was a very comprehensive presentation, but it certainly pointed out some of the areas that we needed to consider this afternoon. So in a quick nutshell, these are my quick points of what would have transpired this morning and which would have set the base for our presentations this afternoon. So I would like to go straight into the presentations given the time that we have. And I'd like to first treat with the tables that address the issue of policy. And I'll ask the first table to do their presentation and subsequent tables to add new or additional points to the presentation so that we won't be repeating the same thing. And likewise for legislation. So let me invite first table 4, who have dealt with policy, to come forward and do your quick presentation.
And we simply propose a number of items. Well, we have suggested that the fund be given a purpose, and we said the purpose of the fund is institutional strengthening of the cooperatives, inclusive of the cooperative division. Again, suggesting that beside the entities that we have, we know them, the people who manage and assist the cooperative will also need some kind of assistance. In terms of the initial funding, the fund already exists, and therefore that exists as it is. We also suggest there needs to be some mechanism for continuous growth of the fund or injection into the fund. And we are suggesting a 0.5% of the net surplus of all cooperatives annually. And in that context, we're also proposing, or we knew that there was a proposed amendment to Section 50 of the CSA that dealt with setting aside 1%. So it simply meant some kind of amendment that would have allowed that to maybe read 1.5% of annual set aside. In terms of the annual expenditure from the fund, the issue of the depletion of the fund became an issue, and we're suggesting that maximum in any 1 year, 10% of the fund be used for this institutional strengthening. We are also suggesting that for any one activity, be it the strengthening of Palaseco Credit Union or the strengthening of an activity at, let's say, Roxbow Corporate Society, no more than 30% of that allocation be spent on whatever that activity is. Now, that doesn't mean that the activity needs to cost that, but the fund would only finance that portion up to that value. We also discussed the issue of the allocation, because we have both financial and non-financial cooperatives, and therefore, most likely, there will be a challenge on where the money should be spent or where the funding should go. We are suggesting a 2/3, and there's only a suggestion, a 2/3, 1/3 split, where 2/3 of that allocation for the year would be channeled towards financial cooperatives, and 1/3 would be channeled towards non-financial cooperatives. We also propose that in terms of access to the facility, that it should be through an organization like NACS, a national association, and a secondary bodies, so that the agricultural cooperatives will form into a secondary bodies, the credit unions will form into one, the various fishing cooperatives will form into one, and then it's through those bodies the proposal will come, they will come to NACS, and then roll up into the management of the fund itself. And that's basically where we spend the evening focusing. I don't know if there's any.
As my colleague talked about funding, we had a whole discussion about developing a bank. So let me pass it to Kevin so that he can expand that a little further, and then we continue.
Good afternoon, everyone. The idea of a cooperative bank is not a new idea. Trinidad had a cooperative bank that was subsumed eventually into First Citizen Bank. What we are saying that it should be a cooperative merchant bank, because you do not want people, you don't want to interfere with the basic business of the credit unions and other cooperatives and lending to people. But in order to utilize the funding that cannot be absorbed in that institution for capital fund, etc., you will probably need a bank. So the cooperative, the unit, can invest in other dimensions of the economy. When you talk about the big projects in energy and the other projects, then that bank can do it. Secondly, the second reason we thought of that bank too was, and this will take some thought, the question of the central bank regulating so many small financial institutions became an issue. The question is, could not this bank help with regulation? And the central bank, as part of, it's a financial institution, and the rules are already control that bank. So the central bank controls the credit union bank, the cooperative bank, which then controls the other. To me, that's a little better structure and a little better efficiency for the central bank regulations in terms of that. So those are the two big areas in terms of the whole question of the bank being an engine of development for the cooperative movement and trusting it into areas that it does not know able to because of the fact that they're not pooling their resources altogether. So that was the
Thank you very much.
So, continuing, we talked about capacity building, and as Mr. Adams has said today about funding to assist the institution like Cipriani Labour College. We were suggesting that the movement adopt the college in terms of this is ours, this is for our human capital to develop, and therefore inject funds into it, and in turn the college owns the movement to ensure that our people are trained, right? We talked about the major universities as well, adopting the whole mindset of cooperatives, offering doctorates in it. If you want to develop the country in a whole, having universities offer masters and doctorates in the cooperative movement, in cooperative studies. Then we talked about the non-financial cooperative development. We talked about embracing technology, ensuring that all of cooperatives are technology savvy, that people can have online, for want of a better word, banking. They can access their accounts via online. I'm not sure that that happens extensively right now. And just running quickly, national promotion of cooperatives, we thought of it being part of the school curriculum so that we train our young people from childhood to start thinking cooperative, having it as a way of life, so that especially our young working people, they're able to help each other, to work together in housing. Now our country thinks individualistic. Everybody's about me, I, my house, my car, my whatever. We want them to think cooperative, and therefore, if we include it in the school curriculum, people can grow up. You have housing cooperatives. Young people wanting to build, they build it together. Finances, whatever. For good governance, basically, fit and proper policies that they would engage in due diligence. And of course, we have a lot of it set out already. For development of other types of cooperatives, we looked at in education, in housing, in the energy sector. In particular, talking about the energy sector, we are thinking that exploration is going on outside of Tobago. Are we training our people and getting them ready in case there is this big find? What is going to happen in Tobago? Is the cooperative movement engaged in preparing its people for that? Because if we were to find it, then we'd have to go outside to look for experts and leave our people right here just watching them, continuing in our little spheres, all right? So I think the cooperative movement has to have a vision for national development and get into it, not just stay with agriculture, but get into energy as well, and manufacturing, whatever. Train our people. And that covers continuous training. Funding for cooperatives, we talked about that with the bank. And I think I will stop here so that other people can add.
Thank you very much. Let me take the opportunity to welcome back Senator the Honorable Jennifer Baptiste-Primus.
Our table linked that to institutional strengthening, and our statement in terms of policies to ensure institutional strengthening is led by the collaboration of government, the league, and the cooperative department to ensure that societies remain relevant in today's world. We basically develop statements of policies, short as they may be. Respect to non-financial cooperative development, to provide and encourage the non-financial corp as a valid business alternative, and to encourage support of the non-financial cooperative by financial cooperatives. Respect to the national promotion of cooperative, to engage in consistent dissemination of information on the benefits of cooperatives as alternative business model for persons getting involved in business. As regards to good governance, we put forward that the cooperatives should have the annual submission of their financial statements as a matter of course, and cooperatives lead in the development of clear policies that governs all aspects of the operations. With respect to the development of other types of cooperatives, we link that to the same thing as non-financial cooperative development. Funding for cooperatives, we had the same, one of the main points used by Table 4, which was cooperatives contributing 0.5% of the surplus to maintain the Commercial Development Fund. We add, in terms of use of the fund, to assist in development of startup cooperatives. Revitalization of the institutional strengthening of the Cooperative Development Division. We look at a Tobago perspective, one, establish a position
our Commissioner of Cooperative Responsible for Tobago Affairs, and you also put forward the position that the cooperative division should have adequate human and financial resources to effectively and efficiently service its constituents, members. Junior Corp, to ensure that all cooperatives adopt and develop at least one Junior Corp to facilitate continuity in the sector as we move on. National Cooperative Education Program in schools to make cooperative study part of the school curriculum from as early as the primary school level onwards. Market research to facilitate that. We say that the cooperative should submit their annual reports and any statistical data to the division to facilitate this purpose. And respect to federation building to establish linkages of the secondary and tertiary cooperative bodies for the overall development of the sector. As regard to other ministries, to provide networking with other ministries that are relevant to the development of the cooperative sector. That is our policy statement.
Thank you very much. Just for the record, could you just remind us of your name?
Mine, Louis Charles.
On behalf. Thank you very much, Mr. Charles. Let me call on table 9, and maybe you can identify your presenter by name.
Yes, I am Didan Daniel, and I'm the presenter for table 9. We're just going to enumerate some of our policy prescriptions that we hope that will guide the development of the unit. As it relates to capacity building, we recognize that to the continuity and the development of this sector, we need to pay a lot of emphasis on that aspect. And some of the mechanisms that we thought about to deal with that is with some continuous training to develop our mentorship network where we could have persons with the requisite skills and so on who could impart those skills to other persons within the sector. We also talk about using Cipriani College as the preferred and flagship institution for training persons within the unit. But also recognizing that there's a need for institutional strengthening and capacity building within that institution as well. As it really similar to the financial cooperatives, we also see some of the similar prescriptions for the non-financial cooperatives. Right? In terms of the national promotion of cooperatives, we want to see the cooperatives, especially the non-financial cooperatives, being much more integrated within the economic activities on the island and the country. And we talk about an initiative somewhat similar to the Fair Share initiative that I think was brought on board with the Madden administration, where there are certain guarantees for cooperatives to have meaningful participation in economic activity. So I don't want to use the word preference, but favorable conditions so that cooperatives could participate much more meaningfully in economic activities on the island and in the country as a whole. And not to mention aspect of tax exemptions for cooperatives. Remember those bygone era when we could have gotten 25% tax credits for credit union savings and so on. In order to continue to build the sector, we think that should be revisited. There's no question about the need for good governance. We think that is critical for the future development of the sector. So that as a policy, we prescribe to the tenets of good governance, like, and so on. In terms of the development of other types, again, in line with the developmental trust that we have in the country, both at the local level here in Tobago and nationally, we see a need for help in integrating the cooperative sector in the diversification of the national economy. We know for decades, nearly 66 decades, we were talking about diversification, and I think it's an opportune time for the credit union sector, the cooperative sector, to be heavily involved in the diversification trust. As it relates to Tobago, we prescribe some light manufacturing cooperatives. We're more so in the service economy, but we want to see some light manufacturing as well as some housing cooperatives, because we know that the Assembly has its challenges as it relates to developing housing units, and we have had some success stories like the Susaland project and so on here in Tobago, and we could expand on it more. Continuous education, somewhat similar to what happens to people in the engineering trade or the accounting trade. We think it should be mandatory for officers within the credit union movement, the cooperative movement, to have a minimum amount of educational access. We put it that way. A minimum amount to be able to continue to serve as officers within these cooperatives. The funding, government again should demonstrate its support, similar to how you would fund the Agricultural Society of Trinidad and Tobago with an annual subvention. I think a similar subvention could be placed within a fund to be able to develop the cooperatives. Just like the other groups, we heavily subscribe to the idea of developing the junior cooperatives. We think that the cooperative principles are very good for national development and should be entrenched even at that level. Skipping, just to add, as it relates to market research, in order for the sector to be relevant to the needs of its members, we think that it's critically important that we are always on the cutting edge of the information that is out there within the environment, to always be scanning the environment and getting information so that we could be relevant to the current and emerging needs of our members. As it relates to federation building, while we are in the capital of paradise, we recognize that we need to have linkages and federations at the local, the national, regional, and international level, so that there is alignment toward what's happening globally, so that we are globally focused while we be also sensitive to our local concerns. So the federation building would be two. Subscribe to that. Linkage with other ministries. Some of the mechanisms that we chose was like MOUs with the different ministries and departments within the THA, and to ensure the working of those MOUs, not just piece of paper, but make them workable by having certain deliverables and have meetings and so on, so that there's achievement and things happen. So these conclude the points that Table 9 would have developed as it relates to some of the policy prescriptions. Thank you for your time.
Thank you very much, Table 9, for that comprehensive listing of issues that you have raised. I think we can now move to those tables that would have treated the issue of legislation. And again, I ask that you say your name as you stand and give us your suggestions and ideas for consideration. So we can start with Table 8.
Table 8.
Yes, sir.
Good. All protocols observed.
Name?
This is the...
Name.
Oh, sorry. My name is Carlton Guy. I am affiliated to Mount Pleasant Credit Union Cooperative Society Limited. We are responding to certain items that were given to us. First item, structure of the regulator. And we are saying that the commissioner's office should be adequately and properly staffed to strengthen this office. We believe that there should be a three-member committee at the various chapters or region inclusive of Tobago as one. This committee is to report to the commissioner. The committee is to report to the commissioner as having divested some of its authority, so that in terms of arbitration and hearing, problem solving, the committees can assist and report to the commissioner. In the area of statute, we have decided that Statute 1 is the ideal statute for us, since it keeps the movement together, governed under one document, even though it may be voluminous. The item of cost for provision of services by the regulator, we felt that a minimum cost should be charged for the services done by the commissioner's office, and the charges should be confined to filing cost and training, which ought to be minimal charges. Legislative issues. Fines for breaches. We believe that the commissioner's office should apply fines with sanctions, but there should not be any criminalizing of faulty credit unions. Fit and proper. The document given to us as it is, we found that it is quite onerous and would eliminate persons who have not any formal training but are quite competent, possessing the requisite qualities to lead a credit union. This is indicative of the indigenous nature of credit unions here in Tobago, starting with persons who never venture into secondary school, farm, or a higher school. But we also felt that the commissioner should do some due diligence on board members and committee members as well for a startup other than those that are in existence. Funding for cooperatives. We felt that no legislation is needed to govern this. The movement, however, can cooperate to fund each other. This is again through the consolidated manner of the creation of a bank where the funds can be pooled. Term of office. We are satisfied with the proposed legislation, that is 2 consecutive 3-year terms, director or somebody committees. Registration process and requirements. We felt that one registrar is sufficient for us. Hiving of the non-financial activities, the policy ought to inform the legislation. The suggestion is that the non-financial activities be determined upfront through the registrations. As I seek to conclude, prudential standards, these should be legislated in that there should be a very structural, commonalized system to govern all of us. Process to remove directors, this should be legislated. And lastly, permanent shares. There should be some sort of allowance to cover these through legislation. The permanent shares, we made mention of a very rare and unfamiliar to us here in Tobago, since we only have one set of shares. And we believe that that can help to strengthen the credit union individually and also allow for greater expansion. Last page, there's the last page. On the runoff. And then we have the treatment of shares, liability and equity. We felt that that should be legislated for. And lastly, am I guided well? Deposit insurance. This should be mandatory to govern all credit unions. On behalf of my table 8 members, I thank you.
Mr. Guy and Table 8, thank you very much for that very comprehensive review. Can I call on tables 10 and ask that you just add the new points? We did promise that we would finish before 4:30.
Nerlene Simmons, Tobago United Corp. Dr. Guy would have taken all our information.
That's okay.
You say great minds think alike. So I will reiterate the strength of the cooperative development division and create an authority. We want to say that the said cooperative/credit union should be maintained under the commissioner's care. We are also inputting that a body be set up. Just as we have a board of directors, somebody set up to provide information to the commissioner, and he has that final say. We want to touch on the breaches, fines and breaches. We feel that the fines need to be a little more, it should be increased for certain breaches within the cooperative credit union movement. A little more consistency or support on a timely manner as it relates to financial reports, submitting financial reports and having AGMs for the particular fiscal year that is reporting on. Fit and proper experiences, directors serving on the board of cooperatives and credit unions. I think the input there, they should have financial and business knowledge upon serving on any board, which is critical. Funding for cooperatives. We support the percentage, or some sort of percent going towards funding of cooperatives, especially the junior cooperatives and cooperatives who are willing to start. We would like to encourage the tourism cooperative, especially in Tobago. We think that we could capitalize on the tourism cooperative a little more, and the cooperative in the schools, the education, and the Cipriani College. we are